TraderTrader.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the daily brief video that we do here publicly. What's Chris got for our headline here? Crude oil falls mo. I can only see. There we are. More than 2% as EIA data is delayed. All right, that's the headline for today. Welcome back to the frivolity. It is we're a little bit late here this morning. I noticed kind of an odd tone to the community here. Interesting. We don't have anybody in the daily brief public video Zoom call. This seems a bit odd. No, I'm not quite sure where to go here this morning with you guys, but I suppose we'll go through somewhat of a normal routine. Try and do it, but geez, I guess I'm just so ranty. People are not really that interested in listening to my insanity. Anyway, as we said, 8th of November, marching our way through now the month of November 2023, only a month and a half to go for the rest of the year. We have options expiry coming up on the 17th. That'll be a big monthly options expiry. Had a lot of fun with the level 3ers who are getting introduced to options and panic accumulations and secret options formulas and all that kind of fun stuff. And then actually we had a really fun secret options formula club meeting last night, our stock pickers club. Nothing really stunning. Actually, there was one idea that David O, I think is a consummate professional in the market. Did notice this little pharmaceutical stock this morning's doing some pretty big volume here this morning. I don't know whether that chart's really anything to get too excited about. But David really likes the 3D printing companies. I think he did a bull call spread on this company. You can see, yeah, market's pretty washed out. That's a weekly chart. And I think this was basically the spread trade, if I'm not mistaken. But you can see stock's moving up nicely. It looks like a nice inverted head and shoulders. So he's kicking butt there. Way to go, David. In fact, actually, I think I even did a screenshot of it. I think that's what this was. I guess buying the $8 calls and writing the $12 calls, the spread's total cost 17 cents. So anyway, we were having that kind of conversation last night. I don't know whether this is the difference. Actually, it looks like the original cost was 23. But it does look like his trade's performing now. So, you know, there's a nice little free idea for all of you coming out of the SOF meeting last night. As well, too, it was fun to hear Francis talking a little bit about his evolving application, I suppose, maybe you call it. I don't know, spreadsheet, you know, plugging in formulas, all that kind of fun stuff to come up with straddle trades on earnings reports. So it's great to see the very, very professional approach the community's taking to options trading. And actually, we had one student who even pointed out that technically NVIDIA actually is spinning up a valid SOF, secret options formula. It meets the criteria where options prices are cheap enough. There's no sort of anticipation of the market moving down, that at the 50% level, and a student found this yesterday, which was super cool. Although I thought I had a nice write-up of this. I don't know what I did with it. But we were looking at this yesterday, and this was just the simple chart that I had posted. The May 2024 400 put for $30, and at the 50% level, that option is going to be worth $94. There's the 50% rule. So that does technically meet the criteria for my secret options formula to actually justify looking at buying put options. Can you buy at least 6 months of time? And at the 50% rule, is the option going to be have twice as much as intrinsic value as it has right now, just purely in time value? So you can double your money. You buy 3, sell 2 on the dump, and then ride the free one. And, I don't know if there's a nuclear bomb or something, or who knows? You can't write better fiction than reality. Who knows what the reason is, but if this thing does start tanking, you might find that actually that runner turns into a lot of money. So that was an interesting outcome of the meeting last night. And I did ask Francis to plug NVIDIA into his secret formula and see if there were any interesting spread trades like that DDD that I just showed you. So actually, I'll probably go through and digest this. You can see buying the 335 puts and writing the 245 puts. That's a hell of a long way down, but nonetheless, does look like it meets his criteria. So there are ideas that we are kicking around. The unfortunate thing, though, is that they're kind of contrarian. This NVIDIA. Maybe it has another leg higher, but it is interesting to see that the options data is actually starting to support seriously considering looking at puts. So that was sort of the outcome of the meeting last night. Actually, one name that we really liked coming out of the meeting last night was GLXY. Good old Mr. Novogratz. I guess he's back in the good books of the market. I don't think I can chase the market up top here, but and I've been buying this stock all along here. You can see I bought a little bit there, bought some more here. Maybe on pullbacks. I think we're all expecting a pullback into like sort of maybe February, March on crypto. Maybe that's how long it takes for this correction to happen. Maybe it happens next week. Who knows? But if we get a gap fill in there, this is looking like a very, very interesting investment idea. And of course, this is playing into the coming crypto cycle, which we all, sort of know and expect to come. You can see it's pretty good looking chart. Nice W's. So, you might actually hear that Mr. Novogratz is back in the market's good books soon enough. Who knows? Anyway. So that was one of the conversations we had last night in the Stock Pickers Club, looking at various stock ideas. Excuse me. Futures trading. First, love getting up at like 4:30 in the morning. Nothing pleases me more than that. But what the hell? I was like, well, maybe I'll go and see if I can prove to these people on the website I can still trade futures contracts. I don't know. Nice to see the little account that I am running is positive. It's up about 10-15%. Took a whopping 15 ticks from the market today. Woohoo! But probably the more important thing here is I am absolutely obsessed with process goals, with doing the right thing, behaving correctly. And one thing I do like about the opening range trade is that it's very mechanical. And if anything, what I like to see is take some money from the market, and then if you want to risk that money that you took from the market on other trades through the day, great, go for it. At least you're risking the market's money. So that's one reason why I do like the opening range trade today. The problem is that we had like Jerry coming out and speaking at like 6:15 in the morning. And then we had like the EIA say, well, we're not going to report data because we're changing our systems and a whole bunch of other gobbledygook. So the market was really a mess. And frankly speaking, I didn't even really like this trade this morning. But nonetheless, this is probably a good demonstration of best practices. So there's your first minute of trade. There's our signal to get short. You can see we took a little bit of heat on the trade. I like to force myself to take one contract off at 1-to-1, move my stop to scratch. So then that way, because a lot of times you get this kind of action where 1-to-1 was about the farthest it went, and then it comes back. And, if you just held on and did nothing, then you would have been stopped out for a full loss. Boo, hiss, hiss, boom. So as I said, took 15 ticks from the market on one little micro. Better than a kick in the pants. Not enough money to really get all excited about, but process goals, 100%. So I felt really good about that. I suppose, Econs today, you can see the stock market not really overly excited. We've had talked recently about how it does kind of look like the stock market itself. Where's the best place to show you this? I think we're kind of bumping into like a neckline here. So we had this big resistance point. This is a 4-hour chart up top here. And in a weird sort of way, actually, this is a really good example of market symmetry. So if you look left and, throwing this move up higher here, especially like when we broke through these levels, you got to think, okay, maybe we're going to go up into here. Maybe we got to go all the way up into here. So sure enough, market pops up into here. I think you could actually make the argument that the most logical expectation at this point is now up, down, up, down, up, down, up, down. I think we're probably going to replicate that here. Up, down, up, down, up, down, up, down. And then if this is an inverted head and shoulders, then great, we break out through the upside later on. But first, we probably got to do a little bit of backfilling. And really, I might argue that, we maybe do a little bit of up, down, up, down, up, down, maybe carve out an M. And then we got to actually probably come all the way back down and then head all the way back up, which means that, probably going forward, we're probably going to do something along the lines of back down and then back up, right? Now, ironically enough, that would just be good old Hoag's 80% play. And you might even argue, based on this, market accepted back into value here. So 80% of the time, probably got to jump back up to the top of value, which is exactly what happened here. I don't know how this is going to resolve. We might just go sideways here and then break to the upside. You never know in this crazy game. But my hunch is that it looks like we're forming some sort of fractal here. And it's interesting. I keep hearing more and more and more talk about this guy. I don't know whether I mentioned it in the free video yesterday, but we had actually a really cool after party yesterday. Maybe it was in the after party. Might have been the free video that I mentioned it, but I think it was just the after party. A new guy that I haven't really watched too much, but I really like his sort of bent in the marketplace. Kind of dry. So if you're not really into economics, it's kind of tough to take too much of this. You might have to watch him in spurts. But I really like this gentleman. I think he's got a good head on his shoulders. So we spent a lot of time yesterday looking at this guy. I don't even know his name. It's just talking head on YouTube. But anyway, 90% of all maturing commercial mortgage-backed securities loans just went bust. That can't be a good sign. And then I was hanging out with Chris before we were getting the video going. And by all means, if you have a chance, I don't know whether we can. Maybe I'll just throw the link into the little chat box here on the YouTube. So if you do want to watch that and you're watching the free video, I don't know whether the chat thing actually plays back if you watch these videos after the fact, but anyway, there it is. And then, and this is a little bit older, but nonetheless, I think it's perfectly relevant. I was sitting listening to Chris's girlfriend this morning. And if anything, look at Chris's girlfriend's face. I think that basically is the perfect analogy of what she thinks of the US real estate market right now. So interesting. I was able to pause that right on that. But man, you listen to these people and holy Shiite Muslim, you'd think that the damn sky's about to fall here. I mean, it's one commentator after another commentator after another commentator. So at some point, I suppose you got to start respecting what the hell they're saying. And I've been sort of humming and hawing about this with you guys is, this is the conundrum that we're in. We all know, of course, money supply basically dictates the size of the economy. And here's this crazy housing market data. And keep in mind, people's wages are not going up. And actually, if you listen to her, people are still actually deferring mortgage payments and stuff like that. And they're only now being sort of told, hey, you have to get your mortgage back up to snuff. And then going back to our buddy here, I'll probably figure out his name. Um, I'm not quite sure. I got to figure out this guy's name. But anyway, some of the data points that he was talking about in his video, oh boy, there's some pretty nasty writing on the walls. For instance, here, this data point, right? This is this commercial mortgage-backed securities. And, you know, the maturity in default in September here, almost 90% of all of these mortgages were in default. Holy crap on a stick. That's not a good sign. You could even say, like, obviously he pointed this out, like, you know, I think we have a bit of a problem here. So writing's on the walls. And, you know, I was kind of joking about this with Chris earlier. You know, it might be so bad that, you know, I get the impression that they basically canceled the recession in 2019 because the situation was so bad and they needed some sort of massive bailout. And of course, you know, they blamed the sickness for it, but it was just the biggest honking, you know, and you see the money printing. So the question ultimately is, I mean, if this thing goes and W's out, are they going to go through another massive money printing? Because the anecdotal evidence from these people, you just listen to them, and I mean, look at all these things. Hey, the whole damn sky's falling. Well, I suppose the easiest way to get out of all this is for them to go and print a whole shitload more money, and everybody gets a free ride again, and they just kick the can down the road and more hyperinflation. So I don't know what's going to happen here. No idea. But I think Danielle's face right here, I think that absolutely nails the sentiment perfectly. It's not a very happy-go-lucky environment. And what's interesting about all of this is, you know, if they do kick the can down the road again, I mean, the guy that's running the damn US right now, he's going to be dead before they let this thing break. We have a lot of people on TRI. We have one gentleman in particular, Cole, who's super. In fact, he was in the options meeting last night. It's always fun chatting with Cole, but it just feels like they just keep kicking the can down the road, keep kicking the can down the road, and at some point, it's the can's just not kickable anymore. And I suppose this is good old Ray Dalio's whole sort of you know, the day of reckoning is coming. So be forewarned. Anyway, I'm not quite sure where I wanted to go with all that. It was an interesting commentary, a couple videos for you to check out that are not really beamish kind of stuff. This is more just stuff that I'm pulling down from other sources that I think that there's plenty of anecdotal evidence out there that either A, the economy is going to break and it's going to break really hard and we'll probably have to see Great Depression days, or B, another big whack of you know, bullshit money printing, big bailouts, free money, and then of course that's going to lead to hyperinflation. And really, you know, the sad thing is this is basically exactly what, you know, like I said there about coal, you know, all the celestial studies and all that kind of stuff are saying that you know, 2027 through 2030, it's going to be an absolute nightmare. So you can kind of see that the writing's on the walls. Anyway, with regard to the market itself, we didn't really have a lot of econs today, but we did have a lot of Fed speakers. I don't know whether this is current. I suppose we can just hit the refresh button. Boom. Interesting that mortgage rates actually fell, and you know, I think we've been talking about that a bit, wondering what was going to happen with this conversation. Has the inflation problem actually finished? It's interesting how we did come up into two very significant technical objectives. That is a V top. So, you know, all the interest rate people, inflation people, they're focused on just these past couple of bars. Keep in mind that's a weekly price chart. So I don't know whether I can really call a top in that relationship yet. We probably have to see some sort of M's for us to believe that indeed it's done. And heaven forbid, we don't want to see any more W's. One thing I will say, and I've been barking about this quite a bit recently, is it sure looks to me like the energy market is broken here. Now, fucking crude's only $75 a barrel. It's literally lost like $15 a barrel here in just, a couple of weeks. Boom, 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 boom. And I get the distinct impression that they're probably going to bring crude oil prices all the way down. Now, is this political? I don't know. Maybe. It would be fascinating to hear that Sleepy Joe actually is turning the oil spigots back on in like the Dakotas and stuff like that just to try and win the election coming up here. It's interesting how, and actually, that's an interesting disconnect. So we've got gold prices coming off pretty hard. Silver prices are actually up 1%. That's a bit of a surprise. So where's all this commodity inflation people are barking about? There's no inflation in these prices. This looks deflationary. And, like the big thing for consumers, of course, is the unleaded gasoline market. That doesn't look very bullish to me. And if anything, bear BCDs, it looks to me like we got to go back down and test these lows again. And this actually is exactly what Miss Booth has been talking about, not this guy, Chris's girlfriend, in that she was saying, and if you want kind of a fun thing, and I wanted to do this, but I couldn't figure it out. Chris, what the hell's the damn address to get the Google Trends thing? I always get it wrong, and I can never figure it out. But what is it? That's what it is. Oh, look at that. All I got to do is type in trends and up it comes. And I hate how they, like the way the big brother relegates you there. I don't want to look at the US trends or the Canadian trends. No offense to Canadians, but they sure think a hell of a lot of themselves. But it's actually, Canada represents about 3% of the world economy. And I don't mean to be rude, but, they, substitute drama teachers, he thinks that Canada is a hell of a lot more important than, really it is in the real numbers. But anyway, so she said, do yourself a favor and Google repossession. I guess like car repossessions in the States, and she said that repossessions, it's getting kind of crazy. So I guess there's not this is just day. It would be interesting to see this like over say the past, I don't know, go 90 days maybe. I guess that's just sitting there. And I don't even know if I'm even doing this right, but I'm going to look into this a little bit more and see if I can pull up these charts. But from what I understand, what Danielle has been saying here is that's starting to get a little bit crazy. So if you want an interesting anecdote, sort of a leading indicator before the housing market breaks, all of this sort of smaller sub-tier lending markets start to break, things like car loans, boat loans, all that kind of stuff. So should be. And then she was saying the Google car repossessions, it's actually getting a little bit crazy out there. So anyway, it doesn't matter. Okay, back to our conversation here today. So we didn't really have a lot of econs driving the market today. And like I said, being a crude oil trader, the EIA basically said, yeah, we're taking this week off, which is kind of weird. So we didn't have a lot of drivers, lots of Fed speakers again. And of course, there was Chair Powell speaking in England at an ungodly time in the morning here. I suppose that's like 9:15 back east, so it's a little bit more agreeable. But this is right when the crude oil market opened. So I think that's half the reason why the opening range trade was a bit fluffy there this morning. More Fed speakers, more Fed speakers, more Fed speakers, and then we start getting some data coming out of Japan. Current account, that should be interesting to see whether Japan's running surplus or deficits. Usually they run surpluses. And then, of course, we've got some inflationary data out of China. But, now it's, if anything, I'm kind of happy in this regard, because 5 years ago, if I had said, you can't trust half the information that comes out of China, it's a totalitarian dictatorship. And people would have been like, oh, you're crazy, Beamish. You don't know what you're talking about. Get into the 21st century. And now, at least when I say things like, well, half of the information come out of China is a lie anyway, and it's a totalitarian dictatorship, and they'll do anything they want to steal your money. I saw a video the other day where they said that the black skinned pigs actually sell for a higher price in the marketplace than pink skinned pigs. And so what they're finding, they're doing like anonymous video checks of farmers. They are literally spray painting their pigs black. Like that's how corrupt Chinese society is, just to see if they can get the higher price for the pig. So be careful with Chinese data. Um, yeah, you don't need me to go into that, but it's funny when you go on YouTube and you search for, hey, how's it going in China these days? And some of the stories coming out of it's just insane. So, as always, man, any kind of information out of China, take it with a big ass grain of salt. So, point of the matter here is not a hell of a lot of data to work with, but I suppose the one thing that they're kind of happy with is that mortgage rates are ticking down slightly. That's the big thing that they can hang their hat on. If I understand correctly, but in the lounge, we actually had a few people at TRI listen to this speech, and they're kind of like, he didn't really say anything of any significance here today. I think the general message, and actually, I do like this. This is an interesting article that I sort of stumbled upon. The euro, they're actually saying now that I thought this was interesting. The mixed outlook for consumer investment spending leaves the eurozone very close to recession. Regardless of whether the euro falls into recession, we see enough growth headwinds to suggest that the European central bankers' monetary tightening is done. So that's an interesting curveball because it does kind of leave you scratching your head. Because if you look at the actual US dollar, the index itself actually looks very toppy here. And so my question is, not so much, do you want to be long the US dollar? Do you want to be short the US dollar? Like you can see, that's got like a triple top working here. And you can see the breakdown here heading into that recent FOMC meeting and kind of them, what are they saying? They're calling it like, hawkish pause. I think that's the term that they're using. This is a daily price chart. You can see on the daily basis, the trend has rolled over and started pointing lower. I don't think we've started to trend lower yet on the weeklies. So that's still very bullish, but I might argue that we probably have a date down in this area against this moving average and these tails and stuff here from that daily price chart. That looks like a pretty well-defined M. In fact, we could probably even do things like Foggenbaums and stuff off of this. So the question you have to ask yourself is, okay, if this is bearish, right, and there's 2.618s down there at about 102.35 area, which I think makes sense, right? This was that tail. If we go back to that weekly chart, oh, actually, that's quite a bit lower. So there's that moving average that I referenced, and there's the 2.618 there. I don't really see any technical. I suppose there's a bit of a pivot down in this area here. Probably this big tail right there. All right, so Chris is telling me we're pretty much finished with our free broadcast here. But, the question I would just have here is, where's this money going to go? Is it going to go into the euro? Well, I mean, based on what we just heard out of the Europeans, I don't think so. But let's look at the price chart. I mean, does the price chart support us moving higher? We'll go to like a higher time frame chart. I don't know. I don't really see a hell of a lot there. Maybe what that US dollar weakness is just nothing more than the euro rallies back up to this trend line resistance kind of idea, and that is your US dollar sell-off window. I don't know. That doesn't really look compelling one way or the other. That looks kind of just wishy-washy. Is it going to come out of Asia or is it going to go into Asia? I mean, is it going to go into Canada? Look at Canada. I mean, Jesus, what a train wreck. I certainly don't think it's going into Canada. I was just said that's sort of tongue in cheek. So I'm wondering where the hell the market's where the money's gonna go. I don't know. I'm left a little bit scratching my head on that one right now. Interesting to see stock markets through the morning. Not really overly happy. Nasdaq actually has a double top working. You can see the Russell 2000, which is the sort of the most interest rate sensitive part of the market. You can see ES, Dow, Nasdaq all pushing higher as Russell 2000 not actually making lower lows here. So small cap market not overly happy. There's the crude oil market, and as I had said earlier, crude oil looks extremely bearish here now. And I suppose that's the last thing anybody's expecting is for crude oil prices to absolutely collapse here. But that would be absolutely perfect. It would be so fitting. So I don't know. What's my message to all of you? I suppose we should probably finish off this quick boo at what the hell's things like Bitcoin doing. I hate to say it, but it feels as though, like this is like the bubble of everything. And I don't know, it just feels like there's a lot of expectations for Bitcoin and crypto to move higher. But I don't know. I'm a skeptic, right? I'm from Missouri. You know how all that goes. Looking at this daily chart, this is definitely not the kind of environment that I want to get aggressively bullish in. If we go through this low here, which is 34,405 on the futures, that actually becomes a bit of a sell signal for me on the futures. Do we have bearish divergences in MACD? Yes. In RSI? Yes. And we even have things like moving averages, well overbought. Willie is stupid. The buying interest on this recent push higher here just yesterday was non-existent, so a little bit suspicious there. No real sell signal yet, though. Do see a lot of money still pouring into things like altcoins. So a lot of green on the screen. Look at Chris's favorite coin, this BNT Bancor. Look at that son of a gun go. I wanted this thing to come back down to the bottom so I could buy some. So I missed that boat. I noticed that link that we've been sort of harping about for a while, and I know Chico Crypto, he's like saying this thing's going to go to the moon, whatever. Anyway, lots of money pouring into him. Good old Sjord's cryptocurrency picks looking like a total boss. They're all uber strong. So the altcoin market still seems fairly firm. Usually what happens in this space, in my experience, is the altcoins catch money flowing into it. And at some point, Bitcoin says, hey, what the fuck, man? Why am I being left out? And then Bitcoin has a rally. And then that usually is the end of the move. Now, what's interesting about Bitcoin here, like we said, the future is not really overly compelling. If I look at the daily chart, actually, this is a 4 hour. Well, this is suffice. There's that move up top. And of course, as we had said earlier, lots of divergence here. So not really a move to new highs momentum wise. Did have a nice little rally there midday yesterday, right back up into this trend line. This trend line confluence, wow, what a level here. That's absolutely remarkable. And actually, I was in class teaching this. And when I came out of class, I was sort of like, wow, what's going on with the old Bitcoin? I think that this was related to ETF news. I can't remember exactly, but I did notice that the Bitcoin price was rallying, and then all of a sudden, somebody posted in the lounge that good old Sleepy Joe there in the U.S. White House posted a note that he wants Congress to give him permission to go and shit on crypto. And as soon as that was posted, this little rally attempt just sort of fizzled out, which is kind of a bit of a surprise, but nonetheless, it is what it is. I got another fractal top that came in there, and interesting how this is a lower high. It is interesting on this bullish bot setup that theoretically I should have my stop, move my stop to scratch if 36,118 is hit, and the damn market just won't hit that damn level. So from a setup trader's perspective, this is a little frustrating, but it is what it is. And then as I kind of showed you off of like that Bitcoin futures chart, are we going to go an M out here? If we do, and it's a big if, it hasn't happened yet. Market stupidly overbought. Anybody that's subscribed to the TRI algo, you know what it looks like. So put all the pieces together. If we slip, and then this is the spot market, I like to use stamp for the spot. This is a lower high now, and it's also, we've got lower clothesline highs as well. So keep your eyes peeled. I mean, it hasn't happened yet, so we don't have to worry about it yet. But if we go through and close below that level right there, and that clothesline low there is 34,132, well, that becomes a big fat happy face, and you all know what happens when the market starts smiling at us. So be forewarned, writing is definitely on the walls. We often say that a trader's life, you're paid to worry. So here's a really good example where, if you're just a trader and you don't have an opinion, you're trading things like bullish bots, you're still long, the position is still up, but the market is not really overly happy. It is up until it isn't. So it is still pointing up. And if you are an emotionless and just, hey, I just trade with the trend, well, I mean, you're still technically long. There's a ton of anecdotal evidence to suggest that maybe this is getting a little bit old. And I even know that, things like TRI algos are flashing major warnings here. But you just got to live with this, right? And as I said, I'm actually I'm a little bit surprised at how much green there is in the altcoin space. Look at this Zen. Holy Shiite Muslim. Look at that thing go. So, as long as we keep seeing this kind of price action, and if anything, just to finish off this video, we'll head on over and do the we'll do the after party. We can shoot the shit. I don't know what we'll talk about, but we do have a Coinigy show tonight. So if you are here in North America, or you're a night owl over there in Europe, I suppose a morning owl if you're in Asia, feel free to join us. We should have a very lively conversation. And the question is going to be, and I posed this to Joe, do we do something crazy, like maybe take some profits on air live on this link call? Because it's definitely more than doubled from where I bought it. So now the question is, when do we start ringing the register? So this happened to be the double bottom breakout that I told him to watch for on the show. So it'll be interesting to see what his reaction is, just Joe Sixpack, to what's happened here, and how the power of the W. So if anything, look forward to that. If you can participate, we'd love to have you in the audience this evening. So did Brian tell you anything that's new or compelling here? I don't think so. I think it's just slow and steady. I will say that we're getting lots of confirmation that the crude oil market and energy market is very, very weak. I think this is going to spill over to the rest of the commodities markets. I can't see how gold rallies in the face of crude oil like trending hard down. I think that the cryptocurrency market is still enjoying a nice bid. Somebody actually had posted, I think the bullish driver yesterday was, somebody had said that when they have these big US government auctions of bonds, and of course you can't find buyers of bonds these days, that a lot of money flows into Bitcoin on those events. I don't know if there's much validity to that thinking, but it is one of the sort of reasons why we saw Bitcoin pop up there. Actually, this is a fun conversation, and maybe what I'll do is I'll save for the after party a nice dissection of chaos theory and how this played out, and interesting how we just went and M'd out and finished that move on a 4.669 tag. So anyway, I think we'll leave the free broadcast at that. I hope you got some value out of it. Do yourself a favor and just keep abreast of what's going on in the housing industry. I think I've told all of you that I would like to buy a house for my son, but there's no fucking way I'm going to go and pay these inflated prices. And I've just been sitting here literally for about 2 years, just saying, I'm just waiting for the market to break. And if you listen to Miss Booth, and actually I already start to see it in the States, in China, This is a bit of a weird environment here, very, very government controlled. So my hunch is that they'll probably do more bailouts before they actually let the market naturally come back to where it should naturally be. But anyway. Okay, rant, blah, blah, blah. Adam, hope I see you tonight. You're always around for the Coinigy shows, and we'd love to have you in the audience as sort of our litmus test. So look forward to seeing you this evening. And in fact, actually, I look forward to seeing all of you in the after party as soon as I can somehow get myself to stop talking here. I think we started about 5 minutes, 10 minutes late, so it wasn't terribly over today, but I hope you got some value out of that. All right, have yourselves a great day. Slow and steady wins the race. PMA for the win, and bye for now.